The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street. Just standing around minding my own business as the market continues. As we start this show, S&P at 1993 off about 17 points on the S&P cash. One of the best Mondays for volume in a while, 2.1 billion shares on the New York Consolidated Tape. If you are new to the show, I quote the New York Consolidated Tape. That is all the shares that are traded, whether they were traded on the New York Stock Exchange or on an ECN, and includes what they call Tape B add-ons, which is the Amex and the rest of it. So a little better view of what we look for, X minus the NASDAQ, which has all its volume, right? So kind of all the other volume that's not on the not on the NASDAQ, he said. So we've got an interesting day out here, really starting to put back. If you've been listening to the show, we've been talking about adding some short positions in my newsletter over the last few days. And kind of interesting, added another couple of positions in the Tech Insider this morning. And I think starting to move pretty good. We had added one on Thursday. It was printing around 130 when we shorted it. It's down in that 120 range now. Don't want to curse myself out here. 122. So it is kind of a good start, at least for some of those positions. Gives you a little bit of breathing room. So I'm kind of in a good mood. But I think we've got a lot more to go, especially the way that a lot of these things are moving out here. And one of my other positions, I'm going to call it up 10% on one of the positions that we took in the daily trading newsletter, I think on Thursday. So things doing well and moving along quite as expected. I was thinking probably the beginning of last week that we would see this market crack on Wednesday. I still think that we're probably going to get a bounce tomorrow because of options rollover. And at that point, we're going to know whether or not this market's going to continue down. But incredibly tired, incredibly weak market when you look at a great deal of the charts that make up the stock market. And it's a lot of people like to remind everyone it is a market of stocks, not a stock market. That is, it is made up of many of them. We talked about the weaknesses that we saw. And normally when you get a big crack in a market, it happens when very few of the stocks, i.e. the ones in the Dow and probably the biggest ones in the S&P, are all closing higher every day. But a great deal, even in the S&P 500 or the New York Stock Exchange, are actually closing lower. And a lot of times you'll have 3/4 of the stocks closing lower with the index closing higher, and you wonder just how can this be? And in one word, it is a divergence. It is telling you that fewer and fewer people are pulling the wagon, and more people are in the wagon. What does that sound like? Communism. Anyway, it is all about pulling the wagon, and the less you have, the harder it is, and why we stalled out. Now, is there going to be some more money coming? Well, certainly part of the slam down today was that China's numbers over the weekend did not come out very good, and production were down. We also had some problems here in the United States with housing, new housing sales really starting to tail off. And I sent something to Tom O'Brien last week, which was an ad from Sherwin-Williams. I'm starting to see ads in places that I hadn't seen some. I think we brought up that JetBlue had a sale going on, and then I started seeing some of these other places. You know, it's one thing when it's a individual product, you know, like maybe something that didn't sell. It's another thing when Sherwin-Williams says, hey, it's 25% off on all our paint or 50% off all our paint. Occasionally, you know, people do that just to see if they can't lure people that are maybe in another camp, maybe buying their paint from either Home Depot or Lowe's or something like that. But to me, the ad looked rather broad out there, like maybe there was a glut of paint, just like there's a glut of crude these days. And as we look at a lot of things, kind of interesting to see just the way that this market's moving. And, of course, we're off about 85 cents on crude today. Certainly looks to me like crude is moving down to about that $87 level. And, what can you say? When we look at the rest of the market, kind of interesting to see just how some of these stocks are participating. Of course, Alibaba's off almost $4, a little less than $4. And Apple, even with incredibly good news, not moving very strongly. If you listen to our show on Friday, I brought up the problem that I had with Apple, and that is normally Apple does not give a lot of signs out that it's going to be headed down or that is weak. But you certainly start seeing it in the suppliers first. I am short one of those suppliers in the Tech Insider and have been for a little while. It's taken a little bit, but that short that's been out there for about, 2-3 weeks, starting to show some dividends. But I think there's something that's going to be massively changing in that one, and why I wanted to short out front. I didn't want to wait until the market cracked. It's a little less expensive one. Normally, I like to short stocks that are, $100 and more and be able to buy puts on them. Anybody that's ever done game theory can probably understand that you want to buy $1 and $2 stocks probably when the markets hit rock bottom, kind of like March of 2009. When it hits highs like 2000, you want to be, if you can, find affordable puts, especially with a VIX that is this low. Always cheaper to buy them when the VIX is 12 and buy puts than probably buy and short the equity, at least for risk reward, dramatically goes up, limiting your possible loss, but of course really showing the kind of asymmetrical bet that would be smart in this market, or any market, if you can get it. But, are we up here at these highs? I had to say that I spent the weekend doing a lot of work, going back through Jesse Livermore's book, the thinly veiled book about him, Reminiscence of a Stock Operator, and dug up some stuff that I hadn't known that was out there. I try to reread it every year, but probably since I'm going through it and going to be doing something with it on a broader scale, I scanned it all in and found the text of it. Of course, the copyrights have finally expired on it. So I'm probably going to do something wide and broad-ranging on it. We'll probably maybe talk about that in the near future. But I've gotten through pretty much most of the book. I think I have the last couple of chapters. But it is one of these things where I've seen so many more, how can I say it, so many more opportunities to learn from the book. And every time I come back to it, every year or so, I find a bunch of things that I want to put in my notes. Things that didn't make sense. And, of course, I've been trading pretty much full-time since 1998. And that what puts me into the 16th year, I guess. Almost the 16th year. November, October of 98. But you do find a lot of things that you just wouldn't think about. And I digress, but we're going to get into a couple of those things just because they hit me so hard. But I actually started shorting maybe a little early last week because of an interview I saw, and we're going to get into that too. Of course, on this day in 1954, the Standard & Poor's 500 index closed at 32, finally rising above the record high it set on September 16th, 1929. Sometimes the long-run performance of a stock takes a remarkably long time to manifest itself. And in that case, 24 years? A little longer than 24 years. And if you want to know what's going on in this day in financial history, you can check out Jason Zellwig's This Day in Finance. If you Google that, it'll probably pop up. And, well, I'm going to get to it right now, I guess. I've got a bunch of stuff to talk about, and we've got some charts to look at later in the show. But to me, this was the most interesting interchange last week. And it had to do with a gentleman that you may or may not know. His name's Bill Fleckenstein. I was introduced to him in 1999. He was probably, along with Tom O'Brien, one of the voices of reason in my early days. Tom gave me the way of technically looking at the markets. Fleckenstein gave me a view that really kind of echoed what Jesse Livermore had talked about for so long. And there's some new info babes on CNBC and making their way around on Fox Business and also on Bloomberg. They want to mix it up a little bit more. The downside is that these folks have never traded. Most of the other people, you can tell, that are a little skeptical about a lot of stuff. Joe Kernan, that way, he was a actual stockbroker, at least got a taste of what it was like to try to beat the market. A lot of these new people, not just being a woman, but in fact, probably not having anything to do with being a woman. But a lot of these girls probably not being hired because of the depth of market analysis that they've had in the past. And certainly haven't been around long enough. And early on in my trading life, there were a lot of guests on CNBC. And I couldn't understand, one guy would say one thing, one guy would say another. And I kind of bumped into TFNN, and I thought, wow, here's some people that are kind of looking at it dispassionately. And heard a comment about reminiscence of a stock operator. But also started seeing Fleckenstein as one of the few people out there that really had a good thesis on why the .com stock was going to blow up and the things that I should be looking for. Of course, I was in the tech community, and about half the people I ran around with down here in Tampa were spending about 1 hour programming and about 8 or 9 hours a day figuring a way to be trading on the backside. So much for the 1929 era where everybody else was doing the exact same thing. Anyway, we're going to be back in a minute. I'm going to play these clips, and I think they're quite enlightening.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And so anyway, Bill Fleckenstein, pretty neat guy out there. But I don't know if this Jackie DeAngelis couldn't find anything about her ever being a trader or ever working in the stock market. Looks like she's always been a info babe. But it is one of these things where you have to wonder if any of these people ever tried it at all. And if that's all it was, I would probably have just passed it by. But she also got a couple other guys that were on the round table to chime in. And I knew right away that these guys also didn't know squat, or at least hasn't gone back and looked at their history. Okay, and we're going to do it right here. Drops. Come on. That's not right. It's because I'm looking in the wrong area.
At what point would somebody like you as an investor concede that you've misunderstood monetary policy here? Because if these markets continue to rise, I think a lot of people have gotten it wrong.
And that's Mr. Fleckenstein kind of laughing because he knows that he's talking to somebody. And talking to somebody just doesn't know what they're really talking about. So anyway, basically she says, why are you such a loser? You haven't made any money in the last 5 minutes.
I don't misunderstand monetary policy. I closed my short fund in 2009 because I knew the Fed would print money. I never dreamed they'd be print as much as they were. They'd be successful simply by printing money.
And on that point, you've been wrong.
I was wrong to close a short fund in 2009 because the Fed was going to print money. How was that wrong?
That was 2009, but going into this bull run, certainly, I don't think that you or anybody else has really predicted that we were going to move so far so fast.
So anyway, basically, you haven't made any money for me in the last 5 minutes, so you're a horrible trader. That presupposes that you should always be trading. And I talked a little bit about it last week. We didn't have much of a position in the newsletter for a while. And if it were up to me, I'd probably actually even trade a little less and wait for a little bit better opportunities. And that's probably a little bit more of a discipline area for me. But the idea that you always have to be active, you always have to be making money. If Mr. Fleckenstein, who made, I would imagine, about probably 1,000 times more every year than Jackie DeAngelis did in the crash of 2000 and 2007 and 2008, I would probably wonder what's going on. Maybe, the old saying is bulls make money and bears make money. But apparently, if you didn't make money in the last 5 minutes, you weren't a good trader. And I don't, one, believe that. And two, there was no evidence to say that he knew that the market was going up. You don't have to trade all the time. So here's his response to that.
Right. Well, the problem that I have with what you're saying and what some other people out there have been recommending, too, is that if people had listened to you guys over the last few months, they've really missed out on a big piece of the market gain. So
what? So in the last few months, the market's gone up by a rounding error. So what? How do you
I don't say so what to taking money off the table.
So what? Well, that's it. He made a lot of money. He didn't make the money that she wanted him to make. But he has the right attitude. So what? There are going to be a million times that you miss a trade. If you trade long enough, there are going to be times where you can't see what's going on. And this isn't baseball where 3 strikes and out. You can stand up there and wait until you get the pitch you want. But again, of course, probably never of trading. She is espousing the kind of views and making sure that people probably develop really bad habits in trading. Mr. Fleckenstein, on the other hand, I'm giving him a gold star.
He said the last 2 months, not the last 2 years.
All right, well, the last 2 months it's rallied too. So the last 2 years, last 2 months.
So what? So what? And when markets decline, how fast do we take it away from you?
And that is the answer. Everybody always thinks that they're going to have an opportunity to get out. Now, they aren't like us. We can make, I would imagine 99.9% of the people trading out here could make one click and within 5 seconds be out of as many shares as they want. 10,000, 50,000, they'd be in and they'd be out. The problem is if you are a big fund manager, you can't do that. You can't liquidate 2 million shares of Apple in 5 minutes without putting the price down $20. And the whole idea that these people can basically trade on a dime is nuts. When we come back, we're going to give his final response and move on to some more news. But I think if there is a teachable moment about them, and I'll point to it when we come back, it's going to be this as the top of the market. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
But anyway, one of the things that I wanted to bring up was, of course, I was looking through the reminiscence of a stock operator this weekend. And really looking about, there was a whole chapter in there about him thinking he could make some money before the market cracked, and he got trapped, and lost a huge amount of money. From then on, he finally said this: "What beat me was not having brains enough to stick to my own game. That is, to play the market only when I was satisfied that precedents favored my play. There's a time for all things, but I didn't know it." And Fleckenstein almost doing exactly the same thing here in this clip.
Who says I have to do anything? I'm not running your business. You're not running mine.
No, I
don't
that.
have to do anything.
I know that, but I'm saying there's a lot of people on the sidelines right now that are taking the attitude that you have over the last few years and are kicking themselves because they missed on this route.
But I'm not kicking myself, so I don't really care. It doesn't matter. I don't have to play every day.
And that's the attitude a professional trader has. The other guys are rah-rahs. I'm sure they're distributing stock all over the place. And unfortunately, about 98% of the people in the stock market that you will see on the financial infotainment cable stations are that. It is very tough. In fact, Fleckenstein probably wasn't back on after the high in 2000 on CNBC for another 4 years. They didn't want any part of it. And, of course, if you're on CNBC or Bloomberg or on Fox Business News, one thing that is if the market starts pulling back, your viewership will drop. And one thing you do want to do is make sure and are happy when you can sell a lot of ads, and that is when the market goes up. You're not much on the camp. It doesn't make you any money to talk about the market going down, and I imagine if I was a Pollyanna, I would probably have more listeners to the show. But in the end, those people will leave you when they lose it all. Like Mr. Fleckenstein said, how fast are you going to lose it? Because when they pull the plug on the bathtub and you've got lots of shares, there's no easy way to get out. You can see a drop of 20%, 25% before you can get it, and you'll do that trying to get the last 1% out of a toppy market. And I don't know, a couple of the other guys in it. You can find the link, or I'll send you the link if you want to email me at path@tfnn.com. I'll be glad to send it to you. But I think it's one of the most interesting interchanges. I don't know if it was, if there's some producer behind it that's goading these, but I've seen probably about 3 of these attack anybody that says that the market's top kind of thing on the financial infotainment shows. And it's rather rare. A lot of people just kind of look at you and say, yeah, okay, you were wrong last year, so that's all that matters. And, of course, Fleckenstein's actually starting his bear fund, and I think it has a lot to do with it that he's actually filed and started to push that market. So if there's 2 things that you should learn from a pro like Fleckenstein and from somebody like me, as I espouse these things every day, that is you don't have to swing at the pitch. They don't call strikes. When you swing, maybe you get a hit, maybe you don't. But wait for the one that's out there. You don't have to trade every day. And as Jesse Livermore said, and it hit me early on when I read the book the first time, you're not working for an hourly wage. You're working for profits. And a good thing to think about. Out here in the news, of course, we've got another election coming up here in about 2 weeks, especially people in the commodities business. Didn't have a chance to, Andy called me on Saturday. We talked about something. He was writing another article for Seeking Alpha. And I'd said something said if he could use it. And I said, sure, because for the most part, everything I do is an amalgamation of people that I've heard from in the past. I stand on the shoulders of people like Wyckoff and Jesse Livermore, Tom O'Brien, a ton of other people that have come and gone on TFNN from technology. But I remember somebody saying that that I basically owed myself to them because basically that was it. And I remember sending an email back to him and I said, well, if I have to say that I am totally because of you, then I'd have to probably dig up the bodies of Jesse Livermore and Wyckoff and all the people that have come before us so that we can have learned. Not a whole lot new under the sun. The big difference is whether you can learn from it. And new and interesting thing. But I don't claim to think that a lot of the things I have out here are new. Just that I can identify it and I can learn from history, and I will try to pass that on to you. But anyway, we were talking about Scotland and all the 3 things that happened last week. In a couple of weeks, we're going to have a new election in Brazil, and guess what? According to the polls, it's coming down to a wire down there. And, of course, Brazil, hugely a issue of raw materials. And just start thinking about that already. We're about 2 weeks off, and it is yet another close election. I don't know how it would affect Brazil's exports and things like coffee and all the rest, but maybe Andy will get to it if he's listening. Home Depot, well, it looks like they're right into target. Looks like they knew back as far as 2008 that they had problems, and they did nothing about it. And, to tell you the truth, I've talked to somebody just a few weeks ago, and I said, hey, you're buying this new $20,000 computer. And the first thing you ought to do is back it up. They said, really? I'm going to have to pay $50 for the software to back it up after they paid $20,000. I said, well, you know what? Maybe I'm wrong. But then again, there are people that don't wear helmets while they ride a motorcycle. And, of course, everybody knows there's only two kinds of people that ride motorcycles, those that have crashed and those that are going to crash. And there's only two kind of hard drives, those that have crashed, those that are going to crash. And, of course, within about 2 days of having it, they had to reinstall everything, and we're happy that they had a backup. Unfortunately, people that aren't comfortable with technology look at the egg heads and the propeller heads and dismiss them as somebody that they shouldn't pay attention to. And, of course, the longer they can ignore a problem, the longer they can keep that cash. But it doesn't look like it's any different than Home Depot is any different than Target. They've known that they had problems, and they did the ostrich move and made more money when they could. And whether it's people I know or people at Home Depot or Target, it seems like executives just can't wait to not spend $1 when it would save 10. Alibaba, of course, down fairly strongly today. What is it, off about $3.80 after the skyrocket on Friday. A lot of people are thinking a lot about this, but I started to see it on Friday. And that is, since you can't short Alibaba and you can't buy puts on it yet, there's one way to short Alibaba and hedge your position, and that is short Yahoo as a proxy. I didn't like the way it was working already on Friday. It really didn't hit me until after the close that that's probably what they're doing. But boy, did they come in and force today on it. Sometimes there's more than one reason why a stock moves. In this case, a bank shot. We're going to have a lot of IPOs this week. There are only a couple that are even interesting, though. A lot of hangover from last week. There are going to be a couple of large energy IPOs in the Marcellus Shale area, 2 new biotechs in the Parkinson and diabetes, Alzheimer's area. Probably the one in technology that is going to be at least the one talked about the most is CyberArk software. It offers a way of monitoring accounts that have high privileges on a computer. And if it starts seeing logins from unusual IPs or a different way of using it, it will announce that to the people in charge, the sysadmins. And it could be a very interesting way of looking at security out here and trying to identify people that changed. Apple hasn't really moved or done much. What is it, off about 13 cents? Certainly hadn't run on the never-ending drumbeat of how many iPhones we sold. Again, I don't think that has anything to do with how many they sold this weekend. It has to do with how many they're going to sell next year. The stock market likes to look 6 to 9 months ahead. And that should already start to worry you if you think that interest rates are going up in June. Back that up 9 months. We're probably getting close. The story here is that it is a handset design from Samsung, which is going to be almost identical to the Apple, the smaller one, the standard iPhone 6. Now, a lot of people have given Samsung a lot of trouble about using a polycarbonate back, i.e. plastic, and not metal and not all the glitter of an iPhone with rounded edges and all the stuff that they talk about ad nauseum. Doesn't really appeal to me. I'm more of a guy that worries about what's in his computer than what the box looks like. But a lot of people are interested in fit and form. When I buy a flash watch like a Rolex, I enjoy the mechanical beauty of it. But not why I buy a smartphone. At best, they look like the rectangle from 2001, the monolith that floated all over the place. They're not going to ever really look that incredibly beautiful. I think a lot of people at Apple have used the Jedi mind trick. This is the most beautiful piece that's ever been designed. Oh, this is the most beautiful piece that's ever been designed. Well, anyway, some of them are probably not as beautiful as others, as long as they work. It's not a car. It's not a Lamborghini. It doesn't have wheels and Spoilers, it's kind of a flat rectangular thing. Anyway, it is going to be almost identical 4.7-inch screen, a little better density for the display, a little better camera. So some people are thinking this is why the iPhone hadn't really moved. There's going to be an option fairly and much less expensively out and for available probably on Friday. Probably start seeing a lot of ads on that, and not going to look that much different. Now, if people really don't care about they buying an iPhone or a Samsung new Galaxy, going to be interesting. Of course, the SEC also has announced the largest ever whistleblower award today. They're giving this gentleman about $30 million. And a lot of people would say, what's the wisdom of doing that? Well, if you got somebody that is doing something really horrible, my guess is, since they haven't announced where this fraud has occurred, it is going to be in the whole idea of how they warehoused the metals, and the whole idea of moving it around to the different facilities to kind of manipulate the price on commodities. But if you, of course, blow the whistle on somebody and make $1 million, but you're making $1 million a year, you're not going to find a job anywhere else. And the idea is, if you pay them $30 million, let them retire, that there will always be somebody willing to rat out the criminals in these organizations. But look for probably some kind of big announcement in the next 10 days. Normally you get these whistleblower awards. So wait for some of these big names in the commodity spaces. But I suspect that's what it is. But I don't have any inside information on it. But $30 million, that you get 10% of what they recover. So it's a $300 million fraud at least, if not more. They can pay you more, but at a minimum they pay 10%. So it's going to be big. Look for it in the next couple of weeks. I'll try to bring it up when it happens. Lastly, when we finish this up, and boy, I haven't got to any charts already today, but I think it probably doesn't matter. We do charts almost every day. There's always a way of thinking, and of course, Lois Lerner from the IRS is out saying, I didn't do anything wrong. Unfortunately for me, I have watched at least some, if not all, of the hearings and read her emails to other people. And the problem with what she said, and of course all the emails disappearing from 5 different locations at the IRS doesn't pass the smell test. But all the emails don't either. And I've brought up this allegory before, but I think you can use it in the stock market. And the only reason I'm really bringing this up today, that is, if you walk into a store and every day you buy a cup of coffee and the person at the counter shorts you by 25 cents or $1 in your change when you come back, you go in there and do that 10 times. Now, you know, if half the time she gives you an extra 50 cents, the other time she takes 50 cents, that's probably not too big a deal. But if you go in there and every time and 10 times you're down 50 cents or $1, you know they're cheating. It's not something that is going to be tough to figure out. And unfortunately, when you get 40 or 50 emails all saying the same thing, they were targeting these people because of the political beliefs, pretty much tells me that I think there's probably something happening here too. I suspect we're probably going to see a contempt of Congress thing coming out here before the elections.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're off 16 points out of the SB. We've got down to 1991. And it is, probably going to bounce around here a little bit. Look for a little bit of bounce tomorrow. And if we don't get any kind of energy out of that, that's probably the end of them setting up options for the next couple of months. And you probably need to really think hard about the downside on that. And see what else we got going on here. Had somebody ask about crude, and I don't know if there's a whole lot to say about it either, other than technically it's setting up for $87. I don't know how much more you need. I think it could get as low as 80, but I think we're probably going to have at least a decent short-term low out here at 87, and then probably a trading range back up to 93 or so for a while until it gains energy. If it goes down there and breaks 87, then we're looking at an $80 level, and could even go lower. Hard to tell. But I don't think there's a lot to tell other than it's already made all the signals it's going to. And all we're looking now is the test of 87 on crude. Now, what I'm really looking at today are two sectors, and I'll put them up here and try to zoom in on them so we can see. Not so much looking at the chart as the entire sectors themselves. Of course, we had poor news out today about people buying new homes, and not uncommon. I think we've gotten pretty much to the into the well of people refinancing and buying new homes, and we're probably going to go back to a more normal run rate in the near future. But certainly from D.R. Horton to the companies making the loans to Hovenian, these things are all off 2, 3. Some of them Select Comfort, people buying beds when they buy a new home, off 4%. Almost all of these are fairly universal out here, and probably a good indication that at least that sector of the market has pretty much topped out. Probably between now and springtime, I can't imagine that we're going to see a huge change, mostly because seasonally you needed to buy your home and start it now if you're building a new home for even into next May. And a lot of those deliveries are not going to be there if they weren't signing up for them. Now, we've got one more month. Maybe they can squeeze it in, but it was so light this month that it seems like it would be problematic to see a huge change in housing starts, at least in the United States up here, probably before next spring now. And that would mean that maybe you have a rally next year, late into the year, for home deliveries. And houses, but kind of tough. Another sector out here that looked extremely interesting to us is, of course, one of the reasons why we are down so much today, and that is China basically said they are not going to be throwing a lot of bad money after good, trying to do the same stupid stuff we've been doing, i.e. throwing money at the system. And, of course, we've had a taper tantrum before. I don't know if there was a taper tantrum in China, but looking fairly horrible, especially when you look at any of the people in the casino business that have a exposure in China. Las Vegas Sands off 3.5%, MGM almost 3%, Impel off 3%, and Wynn 2.6%. So at least two big sectors out here are making a giant sucking sound. Just don't have old Ross around when you need him anymore. I got to get that clip, don't I? A giant sucking sound. I don't know which one I'd use, the one from Saturday Night Live or his. But we're out of time today. I promised to spend a lot more time on charts tomorrow. I kind of got off on a tangent today and digressed. No wonder I win that award every year. And you remember to sow when you can, not when you have to. And see you tomorrow, same bat channel, channel 14.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.